Hello and welcome. You're with us here in BTTV. And a day after a holiday, markets today are a little tepid in trade. We are slipping a touch. Sensex at still about 61,000, but in the red today, and Nifty at 18,174, just down about 27 odd points. So not looking too bad. In fact, the rupee is not looking too bad today either, and we'll bring that one up for you. So a little bit of appreciation coming in there. But it's IPO season. We're tracking a whole host of IPOs that have opened up, and there's definitely a lot of buzz on that front this morning. And other than that, earnings continuing as well. So something like an Interglobe, for instance, has taken quite a knock on the back of earnings. In terms of other gainers and losers, let's bring some of those up for you. PSU banks continue to shine, even though we do have some market men issuing a little bit of a cautious warning saying don't get too carried away. On the other hand, we've got names like ITC, Coal India, Adani Ports that continue to buzz and trade higher. Add a hero to that list, Britannia steady after that sharp uprise we saw on Monday. Kotak Mahindra Bank also continuing to look good. On the laggards, let's just take a quick look as well on what's perhaps not participating in today's session. The Nifty Bank is steady. The broader markets are a little weaker this morning. And in terms of the Nifty losers, Hindalco, Power Grid, Divis, as you can see there on your screen, some of the names that are on the losers end today. But we've got Sharmila Joshi joining us on the show. Sharmila, great to have you with us. Looking good at these levels, have to say. What's your strategy currently when it comes to the markets?
Absolutely, and I think that as of Friday, when we had all the major events sort of out of the way, you had the Fed meeting done and dusted, and you had RBI meeting as well. So you sort of held on for that because you were never sure that what RBI, why it was broadly thought that they would be meeting to answer the government's queries on inflation, because it was coming on the back of a Fed meeting. We didn't know how. Whether there would be any sort of a nasty surprise, and there wasn't. I think where the US markets are concerned, perhaps things are not as good as one would like them to be. There were a lot of mixed signals there. But having said all that, we do know that it is the domestic money which is holding up our market. So going into trade on Friday, since Friday, I've been very positive, and I do think that there is a very good likelihood that we could see fresh highs in Nifty this month. And of course, I think the banking stocks will lead the way. So I think that's how you have to position yourself. You need to keep your sort of stock list steady. Try and do an SIP because at the end of the day, we are at levels from where market has been raised time and time again. So you need to be a little cautious at this level. But I would say that this time around, I'm far more positive than I was say the earlier time Nifty went to 18,000.
All right, great. Sharmila, what's your view on names like ITC, Britannia? I mean, they are moving for various different factors. I'm just clubbing them for the convenience of it. But if you had to pick something, from the FMCG pack, what would it be?
Tough question. When it comes to Britannia, I think numbers were decent. ITC also numbers were very decent. But I do like ITC. I do like a Britannia at this level. But perhaps my choice would perhaps be among the FMCG names more towards like a Dabur or a Godrej Consumer or names like that rather than being in the HUS, Britannia's, ITCs. While I do believe that if you have a core portfolio, one of these stocks should find their place in that. But given where prices are at this point in time and how numbers have been, I think probably I would choose to be in a Dabur or a Godrej Consumer.
All right, interesting there. What about on these PSU banking names, Sharmila? What's your view? Should we or should we not be getting carried away with the performance of an SBI, a BOB, and so forth?
SBI, I think most definitely. I think the kind of numbers that they've given, they have. I mean, it's been a great quarter for banks all round, if you ask me. Right? I think from the time you saw Axis Bank numbers, which was a sort of a huge surprise. Not really surprise. I mean, you did expect them to do well, but I think this sort of meant that you would see the uh, anybody who was sitting on the fence on Axis Bank to turn a buyer. SBI also, I think, completely astounding numbers given the fact that they are a bank of this size. I think HDFC Bank, again, very good numbers. I think coming to the rest of the PSU banks, that's where I think things get interesting. Simply because the key sort of drivers for banking stocks has been the fact that you are seeing the asset quality improve, and you have seen some of them show a decent credit growth, etc. And a lot of them are trading at lower than one-time book value. Now the problem that remains is that whether you will actually see their book sort of being protected, and you will not see any big ticket slippages going ahead. And so far, it seems that we are not going to see that. So I think there is significant upside. So positioning yourself nicely, go with the banks where numbers are good. So probably maybe a Bank of Baroda, or names like that where numbers have been good. PNB, I think the numbers were not that great, so maybe you could skip that. So you need to take a call like that, seeing how numbers work, and do an SIP, because I think you still need another quarter to sort of reconfirm everything that's being said. That's good, but perhaps the time seems to be now right. And as I said, because they're trading at less than even one time their book, you can at least, I think for some stocks it almost means doubling the price from where we are today. So you obviously need some exposure in that, but just be a little careful.
All right, great. Okay, Tanya's also joining us. She's taking us through what the streets are watching out for when it comes to Tata Motors earning. Tanya, take us through. Okay, I'll go back across to Tanya in a second. We're not able to catch her audio there. She's with us here on the news floor, so we'll try and get that fixed in just a moment. But talking about those earnings, and is this a set that you're watching out for, Sharmila? Anything on Tata Motors that you feel could be exciting for the market?
Well, from whatever I've heard and read, I think the expectation is that while it will be a loss, the loss will be considerably lesser than what we have seen in this past year or so, which I think is great news for Tata Motors. But more importantly, I think that my sense with Tata Motors is that finally it has sort of found a lot of support in the Indian markets, largely because their EV story has really taken everybody, caught everybody's imagination, so to speak. Because the numbers for EVs are still small, but because they have so many models that they've introduced, and you're seeing such a good sales, you're seeing such good sales in electric passenger vehicles for all brands, and obviously for Tata Motors as well. So though they're growing from a small, very small base, I think there is somewhere a realization that this could be a future trend, and if you aren't in that zone where you have some electric vehicle offering, then you're really losing out in terms of stock price. So I think that's one very big positive that has played out for Tata Motors really well this last year.
Okay, what else from the auto pack, Sharmila, do you feel could perhaps be a good opportunity given the kind of sales figures we've seen this time around? Clearly, festive season was rock solid. Momentum seems to be coming back now.
Absolutely, and that's why the passenger vehicle sales numbers have been pretty good. And of course, I think the semiconductor issue remains a bit of a thorn. And there doesn't seem to be really any, every quarter we used to say by next quarter things will look good. But I think perhaps now one is getting a sense that things are beginning to ease out. I think what's losing out in the market really, most importantly, is really two-wheelers, and that to two-wheelers which are in the entry-level space. So anybody, even in the two-wheeler space, which has a slightly sort of a more higher scale sort of offering, has done reasonably well. Eicher Motors, to name one. I think even TVS Motors has had some high-end models that they had introduced, and there again they did reasonably well. So it's in fact, one would have thought that given the fact that we had good monsoons and there would be buying from the rural sector, that story doesn't seem to have played out. So perhaps two-wheelers and CVs would be a little bit of a question mark, but passenger vehicles certainly is the space where you need to be at.
All right. Let's take a look at what else is active in today's trade. We've got the likes of a PI that are moving. We've had a lot of agri-related stocks move of late. Other than that, a Bank of India, PNB. So clearly the banks are still on a roll. IDBI, Central Bank, a whole host of them. Bosch is up 4-5% today. 3M India, Vinati Organics is up 4-5%. Bank of Baroda, another 5% in today's session. Bank of Maharashtra, so those PSU banks are definitely seeing strong momentum. SCI is moving. We've seen shipping counters move of late as well. That seems to be a consistent trend coming in. And then, of course, the list continues. A decent smattering of gainers in today's session. But let's take a look at Adani Enterprises, because this one had, a fairly strong move for a few sessions in a row. It's one of the most valued firms now when it comes to the exchange. I wanted to get your view on the Adani Enterprises and its group companies as well, Sharmila, and whether or not you have any of them on your list.
Well, honestly, I think the problem with the entire Adani group is the fact that the valuations are extremely high, which makes it very difficult for somebody like me who's tracking, stocks on a fundamental basis to really recommend any of them as a outright buy. So while there are stories there which I like, I think you can't. It's not value, if you know what I mean. And I think that, but yes, you do need to be part of this group in whichever stock that you may like, because obviously the momentum seems to be with them because they seem to be having sort of the most aggressive rollout plans going ahead. So within that sector, maybe of course I think Adani Enterprise, and then I think stocks like an Adani Wilmar. I think you can even look at Abuja Cement since that's their recent sort of a purchase. But in terms of value, I think there is very little to sort of recommend.
All right, fair enough. We've got Tanya back with us as well. Let's go across to her on those Tata Motors expectations. Tanya?
Absolutely, Abha. As I was saying, we are expecting a good set of numbers this time around, led by a low base and improving chip availability for GLR business. Tata Motors is likely to report a net profit for the September quarter compared to a net loss that the company reported during the same period last year. It is expected to register healthy top-line growth as well. Revenue for the quarter is expected to jump around 32% on a YY basis to 80,927 odd crore rupees from 61,378 odd crore rupees during the same period last year. EBITDA margins are also expected to surge to 10% because of raw material tailwinds. Also, domestic margin will be aided by price hikes taken by the company. JLR volumes are also expected to improve on a yearly as well as a sequential basis due to some improvement in semiconductor supplies. However, volumes may be marginally lower than the management's guidance of 90,000 units. Talking about its performance on the Lal Street, the stock is down over 13% in the last 1 year. However, brokerages are still bullish on the stock and have strong buy ratings. Today, the shares of this auto major were trading flat ahead of its Q2 numbers. Back to you.
All right, thanks for that, Tanya. That's Tata Motors. From earnings, Sharmila, what else has stood out to you? We've got Jubilant today, Foodworks, nothing too exciting on that front. We talked about the banks, of course. What else to you was, a key mover when it came to earnings so far?
Perhaps I think all the key movers have been in the banks, which is why we are seeing the kind of excitement that we are seeing in that sector. Axis Bank complete re-rating of re-rating of the stock post numbers. HDFC Bank, I think after a couple of quarters, once again a 20% kind of a growth. That again coming from bank of this size, plus that whole excitement of that merger to play out. Again, I think a good set of numbers. SBI, largest bank, and suddenly in terms of value, it is possibly like the most valued company. It's even among across sectors, not just among in the banking stocks. So I think banking has clearly been, I would say, the top performing sort of sector. But there have been nice numbers even otherwise. I think a little while earlier you mentioned PI Industries. I think numbers they were good. So I think market has rewarded these stocks when numbers have been good. I think Coromandel International. So within that chemicals, agrochemical play again, numbers have been fairly decent. If you look at the performance that they've had over the last couple of years. Yes, I think it's been by and large a fairly decent sort of a quarter to quarter. This quarter has been fairly decent for quite a lot of companies.
Okay, interesting. There's been a lot of talk about how those cyclicals are going to come back. From that basket, industrial, cyclicals. What do you again feel is a fair value at this point? Where do you see the most opportunity?
More than this, I think that perhaps what we could see, once that monsoons are out of the way, could be more sort of government spend. And because, at the end of the day, now we are seeing the effect of an economy that's completely opened up. So some of it has sort of started being visible in across, consumption sort of play in this whole festive season. But what I really expect to see and would like to see going ahead is government spend picking up, and which would mean that capex for a lot of capital good companies will be sort of back as a story, because that has been something that everybody had taken a back seat on in these last couple of years. Again, I think if you saw numbers of like Larsen, then that did seem to suggest that things were beginning to look better. And if a large company like Larsen begins to do well, it also means orders for many more companies down the line. So capital goods would be one, and I think cement. So I think these could be because these are sort of directly correlated to your economy, and I think that now the game should be to get your GDP up to what one would have thought it would be had it not been for the interruption of COVID in the last 2 years. So I think with an eye on that, you could see a lot of spend coming your way, and these could be two sectors to possibly watch out for going into.
Sharmila, we had Amit Jeswani on the show, and we'll play out an excerpt of that conversation. And he was talking about how there's going to be an insane amount of selling and supply that hits the market. Now, is this going to be on the back of some of these tech names and those lock-in periods ending? Is it going to be on the back of something else, or people booking profits? What are you anticipating?
Yes, I think that is definitely a set that one needs to keep an eye on, because a lot of lock-in periods are going to end in this November, and obviously I think you will have people coming in to take profit. Also, I think when your currency depreciates the way it has, then it certainly means that there's a sort of a double whammy for FIs. So any stock which has had a decent run up and where FI holding is large, you could see some amount of unwinding. So that could be another sort of vulnerable space. But I think, yes, definitely on my list, the first set of stocks to watch out from this angle of a sell-off would be the ones where the lock-in periods are getting over. And I think starting from today, or I think starting from 9th November, we'll have a whole host of names where lock-in periods are going to end. Nykaa, Paytm, etc. To name a few.
All right. Let's in fact listen to a little bit of that conversation Udayan had with Amit Jeswani, founder and CIO of Stallion Asset Management.
I see today that many fund houses, many PMS schemes have quite a bit of cash running on their books.
All right, well, we'll go back across there in a moment. Slight audio issue coming in there. All right, let's just take a look at, what else is moving and just take a check on the markets once again, bring up the indices for you. Still fairly pretty much, as we checked in last, no major hiccups in the last half hour. On the downside, of course, they've got Hindalco, Divi's Labs, Tech Mahindra, Grasim. That's really where some of the pressure is coming in from. Some of these names have been looking a little lackluster in today's trade. What about IT, Sharmila? Are you, have you completely sort of lost flavor with the IT names, because they seem to have, really seen a lot of choppiness of late, a lot of worries about future potential, despite, of course, some great numbers. What's your take on IT?
I think precisely, as you said, I think numbers have not really disappointed, and honestly, I think it's really just expectations of what could go wrong, which is sort of holding the sector back. Because I think even up to maybe a week and a half back, you were sort of seeing a rally in IT. And the minute we had all this data from the US, which was sort of mixed and neither here nor there, you saw a lot of those stocks retrace. Because that whole debate about what's really going to happen in the next couple of months in the US, whether we are going to see that recession, whether that hard landing, soft landing, that debate I think will still sort of be a cause for concern for a lot of these stocks. Honestly, if you ask me, I think in the kind of order wins that they've had or the numbers that they have reported, there hasn't really been too much of an. Yes, maybe you could have expected attrition to be a little lower and They should have gotten a handle on that, etc. But in terms of order wins, etc., things look very comfortable. So I think your long-term strategy should be that you need to be net buyers in the IT space. But I wouldn't be I wouldn't be in a hurry to buy it. I think I would still wait to see how the situation in the US is panning out, and then maybe closer to end of December, first week of January, you could look to revisit all these names. When we start preparing for the next quarter numbers.
All right, let's listen into a little bit of that chat now. I think we've got that audio issue resolved. Here's Amit Jeswani in his view.
I see today that many fund houses, many PMS schemes have quite a bit of cash running on their books, including you. Has the market up move to 18,200 Nifty, etc., come as a bit of a surprise then? I mean, is there even a feeling that the market might be a bit ahead of itself?
So good evening, Udyan. Good evening, everyone. Thank you so much for calling me on this show. Udyan, this cash is for the earnings season. The markets are moving quarter se quarter tak. And the quality of the rally for the last 2 months has been very surprising. It's the neglected stocks which are doing well. The PSU banks, sometimes it's the defense companies, now the railway PSUs are doing very, very well. So the quality of stocks that we typically look out for, the ones which are growing at 20-25%, can reinvest capital at 25-30% ROICs, they've just stayed where they are. So the quality of rally in India is gone a lot more weaker than what we would be happy with. And 73% of quarterly numbers which have come down, the stocks are down more than 5%. Just tells you, if you're not a PSU bank, the markets are bidding you down on any kind of quarterly number.
All right, let's take a look. On the commodities front, Sharmila, I want to chat to you about whether or not you've got any concerns on that front, given what we have seen on the commodity basket.
Yes, a lot of concerns actually. Frankly, where this whole gas and oil situation is going to take us, one doesn't really know, because the concerns are not so much domestic as much as they are international. Because we have a war that doesn't seem to be getting over, and that's going to put Europe in a lot of pain going, as winter sets in and the demand for gas, etc., goes up. I think even in the Indian context, if you see CNG prices have shot up. My guess is they are closer to 90 rupees now, and so almost at par with petrol, diesel, all your standard fuels. And this is a very sensitive sector. So if you're, I'm looking at it purely from an investment perspective. So if you think that you should be investing in oil marketing companies or downstream companies or whatever, the fact of the matter is that these are all going to affect your inflation, and there could be a time when the government might have to step in, and because we have seen that in the past, where that pass-through may not happen, where they may not be allowed to increase prices. So, that is definitely one space I'm staying away from. Then you have metals. Metals, again, we had most of them at very good valuations, and I would want to be a buyer in all. It's just that sometimes these cycles last for so long. So while you do need to stay on the buying side in metals, definitely one doesn't know how soon the recovery is going to be. And then suddenly you had some sort of data coming in from China, and then you sort of saw a lot of buying in metal play last week, and then again a sell-off this week. So I think because where the sectors are sort of very politically sensitive, whether it is sugar, whether it is oil and gas, you have one set of worries, and then with metals, it's another set of worries. But having said all that, I think metals is probably a sector that investors should be looking at, because valuations are now really at levels which make a lot of these stocks look very attractive.
Great, Sharmila, thanks so much for joining us on the show today and talking us through all of your views. We're counting down to close now, and markets are today just below 61 on the Sensex, in fact. So nothing to be worried about, but we were enjoying that 61 mark, so I'm sure we'll bounce back above it in tomorrow. Nifty 18,123 is where we're trending at, just down about 0.5%. Broader markets also were trending lower today. Essentially, just a little bit of an easing off. We have seen record highs of late. Overall momentum, overall mood seems to very much be intact. On the gainers, we saw ITC, the Bank Nifty, a whole host of banks, especially PSU names, even IT in fact contributed today. On the downside though, and we definitely had declines outpace advances. So Power Grid Corporation was one of the bigger losers in today's trade, for instance. And then we also had the likes of a Hindalco, for example, that were not looking too great in today's session. Divi's Labs, that was another one that was, seeing a little bit of a knock in today's session coming in. So on your screen there, Power Grid, Hindalco, Divi's, a couple of the names there that lagged behind in trade. But just pulling up some of the other movers in today's session for you just to get a bit of a perspective. We saw a slightly lower trade even on a Reliance, TCS, HDFC Bank, some of the bigger contributors. However, like I said, an ITC stood out, just a handful of names actually standing out. Tech Mahindra was also down about 2% Ultratech Cement was trending lower. Sun Pharma was also down over 1%. Bajaj Finserv, L&T, Bajaj Finance, a whole host of these names, Hindustan Unilever, that just sat out of all the action in trade today. So pretty much a non-event, but we'll wait and see how things pick up tomorrow. It's a slow week, but markets have been on a roll of late, and the positive views and news continue, as do earnings. Some of those really great big ticket earnings that we've seen over the last couple of sessions. The ones today not so exciting, such as Indigo, but let's wait and see how things progress tomorrow. That's where we leave it on the show today. Thanks for watching.